Well, we don't normally do double uploads, but today is a double upload. We have just seen the stock market absolutely tank off the inflation data. In the early video today, we were talking about DraftKings and what it means for the stock market and everything looking pretty good in the stock market. You know, we've had a good few weeks now after a bit of a downturn, but we've been moving up in the right direction. But we said the next key driver is this inflation data, and it probably be the big mover going forward. And the inflation data came out, and the market did not like it one bit. It sunk the stock market massively. You know, the Dow was down, right now it's down 2.6%. The S&P is down 3%, and the Nasdaq is down 4%. That is such a big move. You know, we talk about a 4% move. You know, the average S&P return is 8% a year. Now, obviously, that is an average, and sometimes it's, you know, extremely higher, extremely lower. But we have so much volatility in the market. And recently, really since like 2020, we were talking about this the other day, the stock market in general just seems to be so volatile. Like, we haven't really seen a market for a period of time where it just, you know, steadily ticks upwards or steadily ticks downwards. It's always like one extreme to the other extreme. It just seems absolutely mental at the moment. And what that's left is a lot of stocks making massive moves downwards. DK, we talked about earlier, a stock that's not really affected in an inflationary environment or a recession, and it's got absolutely killed, you know, 4% down at the moment. A stock like HIMS is down 7% today. Celsius down 5%, and as we know, you know, when we have the indexes down 3%, 4%, we know a lot of the growth stocks are going to be down more than that. It's the same way that when the indexes are a lot higher, the growth stocks outperform, and because it's a red day, we're seeing that downtrend happening for them. But even some of the big dogs, I mean, PayPal's holding okay around 2%. Google down 5%. I was doing my US portfolio review earlier on the Patreon, and I was saying, oh, you know what? I didn't realize Google was having a bit of a bad month, you know, down 13%. I probably will be capitalizing on that sometime soon. Well, I'll tell you something, now it's down another 5%. That's only just confirmed that I'll be taking that opportunity and making sure I'm buying some Google shares at some point on the dip. Meta just, 7% down. Meta has definitely been taking a big hit today. So yeah, a lot of this comes off the inflation data. The inflation data came out, as you can see, came out at 8.3%. Now the consensus was 8.1%, so it was 0.2% higher than what everybody was expecting. So obviously, a little bit disappointing to see it coming in higher than what was expected. But as always, this is always the consensus, this is always the estimate. As we know, estimates are not always going to be perfect. The big thing I always like doing is zooming out and seeing what is the trend. Do we have a trend here? What's the trend like? Are we moving in a positive direction trend? Are we moving in a negative direction trend? And the big thing is, like, for example, if we go off the July data, the consensus was 8.7%, and we were actually 8.5% below, or 8% when we came out. So that was actually a 0.2% wrong in the positive direction last month. And that just shows you that it's very hard to exactly get it perfect, spot on, you know. And there's going to be a little bit room for error. And that's what's happened. It happened last month. I've got to say last month as well, you know, we were 0.2% in a positive direction last month. And I remember when the inflation data came out on the 10th of August last time round, even though that was way better than what the consensus was, made no impact. We actually went on a bit of an ugly trend through that period of time. And now that we're at 0.2% in this direction, it's just totally being received negatively. So it was a little bit disappointing. It wasn't lower than what we were expecting. However, when you do look at this, look at the downtrend is happening. You know, 9.1%. Is 0.6% drop down to 8.5%, and even now we have dropped 0.2%. So we are still having a downtrend, which is the really important part. I generally thought that if we came with an 8.2, maybe an 8.3, we'd be okay. I thought if we had an 8.3 or an 8.2 or even an 8.1, I thought we'd be flat today. I thought the really worrying sign is that if we had an 8.5 and that reduction had stopped, or an 8.4, it was a really big slowdown. But even at 8.3, I'm seeing the downtrend kind of happen. And when we do look at it, it's kind of the same as where we were at in April time. And you could say it's also the lowest since we've had since February time. So from a long-term point of view, when you look at the trend, inflation still has peaked and we're still on the downtrend. Granted, it's not as much as what we was hoping for, but when you look here, the big thing is that we're not moving back in the wrong direction. So yeah, disappointing. However, not that bad when you look from it from a long-term perspective. And that did really seem to spook the market. As you can see here, we were down a massive amount. Now, a few people do look at the core inflation rate, and that takes out the volatility of, say, something like the energy and the food index, which can be quite volatile. And it was quite an increase, as you can see here, from 6.3, which was one of the more worrying things here. But it's always one of those that you can always look at certain things and say, well, this here is a little bit higher. Well, in fact, this is a little bit lower. So yeah, this is kind of a little bit worrying that this is probably the more worrying thing, is that this was a bit more of a jump. Same again though, we still, we have peaked really since March time, but few people are kind of pointing that one out, and I thought I'd, kind of say that, point that out there, that people are using this one. But I always go off the inflation rate, because previously when we had core inflation coming down, people weren't bothered about that. They were looking at the inflation rate in general and saying, energy prices is the most important thing. And when we look into here what was going on, you can see here that energy prices fell 5%. When we do look at a lot of the oil prices, for example, we did see through the month of August they were having a bit of a downtrend, but that was, as you can see, offset by increases elsewhere. So the food index, which was one of the big increases, was up 0.8%. Also, medical care services also rose 8.8% in the month, which is quite a bit of an increase. I think that generally, there's a lot of things at the moment trying to play catch up, because the big driver is energy. Energy has absolutely just skyrocketed, and everything is kind of, at the moment, I still feel, playing to the energy prices. And energy prices going up a huge amount means everything else is trying to adjust to energy prices. Whatever you want to use, maybe even food in general. Food at the moment will come more expensive, because if it means more, to produce, the cost of them through energy, to produce it, to make it, to manufacture it, to transport it, the main driver is energy. And I think always energy is one of the key things to be staring at. And that's why I always using the inflation index with energy in. And what we've seen is, as long as energy kind of carries on downtrending, in my opinion, that's going to be the main driver of inflation. Because I think everything at the moment is trying to do catch up to energy. And at the moment, energy is going down. I feel like if energy keeps going down, that's the key thing. That's what will stop inflation. And even though the inflation data was a little bit disappointing, energy is still coming down. Energy is the key driver. Energy is coming down. It's not a coincidence that we're seeing inflation coming down. And that's the main thing. And that's the main thing I'm staring at, because I think energy is the domino effect. This domino effect of that, if that starts rising, a lot of other things start rising. If energy comes down, everything else is cheaper, and all the other indexes start coming down. And I think that's what we're seeing here. So for me, I look at this and go, it was a little bit disappointing and a little bit higher than what we're expecting. But for me, when you look at long-term picture, we're still in a pretty good position here. Now, one analyst did say that markets have been widely accepting the Fed to enact on a 0.5% percentage point, which we have seen quite often. And I think that's what everyone's expecting into the meeting next week. Now, it says following the CPI release, which is the last data that they'll see before the meeting to agree on it, they said that traders took the possibility of half a point move completely off the table because of the information. Now, I've got to say, anyone expecting half a percentage move, I think even if this data came in at 8.1, even if it came in at 7.9, 7.8, we've heard the Fed have been consistent. We are going to be increasing inflation rates until we see a long-term decrease in the inflation. I think this is the important thing, is seeing the inflation downtrend, and we need to see this downtrend in the next few months. And it will be a lot easier when we get to October time, because this is when the really easy comps come in. And I think that we won't see the Fed calm down probably until October, November time when we hit these hard comps. Then I can start saying that's when we see the Fed easing off. And I can't believe that there's someone that were in pricing the chance of a 0.5% hike by the Fed, because they are going to be increasing them rates massively. So I think if they were expecting that, that's absolutely crazy. It said that also they were pricing now a 10% chance of full percentage point hike. Now, personally for me, I cannot see the Fed coming out and seeing this data and going, okay, this is getting totally out of hand now, it's getting worse, we're going to hike this up to a 1%. Because the Fed are going to be looking at this going, okay, inflation, has it peaked? Yes, inflation has currently peaked at the moment. Are we heading on a downward trend? Yes. So we are doing our job here. That does not mean at the moment we have seen a massive reduction in inflation. Inflation is still sitting at 8.3%. So the Fed are going to be staring at this going, we still need to bring it down. So they're still going to be hitting us with interest rates. I don't think they need to be crazy overreactive though, because they're going to be staring at this and going, it's working. The inflation has peaked. It has coming down. We just need to stick this out for the moment. And I think we do need to see at the moment inflation coming down more and more. And the Fed will be staying on that. And like I said, I think that, obviously this is August, but September we'll probably see it still hiked up. I think in October we'll still see it hiked up. November potentially, but when we get to the back end of the year, December, maybe into January in the new year, I think personally that's where we'll see the Fed kind of hold off there, and hopefully we have a longer term picture then of it dropping, them interest rates taking effect. Energy, energy is the key one. Energy keeps coming down, and then we kind of see it kind of all calm down here. So yeah, overall, a little bit disappointing. However, long term, I still think we're not too in a bad place. And I was really surprised to see 8.3% come out and the markets just kind of go, massive sell-off, massive sell-off. I think if we came at 8.4 or 8.5, then I could kind of understand it. It would have been kind of a moment of, whoa, hold on, this isn't going down as much. But we're still on a downtrend. So I'm really surprised to see the market taking a massive tumble here off this news. And overall, if the market wants to kind of keep this negative tone that it has, if it wants to kind of have a bit of a ridiculous sell-off, which I think it has done today, I thought today should have been really kind of a flat day in the market. I'll kind of try take them opportunities and I'll try buy it, because I'm looking at something like Google, and if the market wants to go, you know what, we're going to give you a 5% drop on Google today, I'll take it, and I'll be buying that opportunity. So overall for me, a little bit of an overreaction today. I don't think we're still in too bad of a place, and some opportunities out there for buying in my opinion. So hope you enjoyed the video anyway, a bit of an emergency upload anyway, but hope you enjoyed it, and I'll catch you in a bit.